GrowCFO is where finance leaders grow together. Join thousands of like-minded professionals using GrowCFO to access the combined knowledge and experience of the finance leader community. You can join us today at growcfo.net. Hello and welcome to the GrowCFO Show. I'm your host, Kevin Appleby, and today I've got a man who isn't involved in startups. He's involved at the other end of the cycle. From the world of insolvency, Mr. Iain Nairn.
Hi, Kevin. How are you?
Very well, thank you. Iain, tell us a little bit about yourself, because the last time you and I spoke, you definitely were not involved in the world of insolvencies.
No, I've definitely got a checkered history. That's for sure. So I am actually an insolvency practitioner by trade, as it were. It's what I started off doing as soon as I graduated. But having picked up some of the skills around insolvency and seeing other bits of businesses around, I sort of moved out and about into the finance world. So when we last spoke, I was with a business called North Star Ventures, who are one of the regional growth fund investors in the Northeast. But I've also spent a bit of time dealing in debt, working for Bibby Financial Services, and have run my own business as well. So I've been have had my own insolvency practice, as well as being FD of a business that took on investment from one of those regional growth funds. So lots of things to talk about in my past and an experience that I've gained, all of which ultimately keeps bringing me back to the bit that I suppose I love the most, because I keep ending back up here, is dealing with businesses who are in a bit of financial strife.
Yeah, that all sounds very fascinating. But this is the first time we've had an England international on the podcast as well. Not just an England international, but an England international captain. Tell us a little bit about that, Iain.
Yeah, very sadly, an ex-England international captain. But so I'm an amputee. I lost my leg at birth, and was very fortunate to have been able to play cricket for the England physically disabled team. And so we captained them to win the first ever World Cup back in 2015, and then we got to the final back in 2019. And after two World Cup finals, that was the time to hang up the bat and let the young kids get on with it. It turns out I timed it quite well, because the team have barely played since August 2019 with all that we've been dealing with COVID.
So in most people's eyes, they're probably still the person they remember as captain.
Sadly, I think they have played now 2 games, and there has been a new captain announced. But I suspect it'll be, with the funding in disability sport, it'll probably be another year or two before we get to see any international cricket. And that someone actually picks up a cap for captaining their country.
Indeed.
But what a brilliant experience and life to live. I'm very jealous of the younger lads now who are getting to take it on. Although I can imagine that there's some real frustration at the minute, because we were just getting to a level where you were getting the support, and the rest of the nations were getting on board and doing things properly as well. And then COVID comes along and shatters those plans.
Oh, indeed, COVID comes along, and I'd imagine COVID comes along, a lot of businesses have had their mettle tested. And you're in the insolvency end of the game. What's happened?
Well, it's been very interesting, hasn't it? Because I think 23rd of March last year, when Boris stood up and said you need to stay at home, my phone rang constantly for probably 4 to 6 weeks, with clients saying, "What do we do? How can you help?" And I have to say, initially, it was we're really struggling with what to do to help. You definitely don't want to liquidate your company or put it into administration at the minute. You don't know what your customers are going to do insofar as payment. You don't know how you're going to be affected insofar as your ongoing supplies and the likes. And we also didn't know at the very start what government assistance was going to come. It took them a couple of weeks to get the furlough scheme announced and up and running. But then talked to a lot of accountants and a lot of IPs. It seemed like every big announcement happened at 5 o'clock on a Friday night, just as we were all trying to knock off for the weekend. And that led to a flurry of phone calls from 6 o'clock on a Friday night.
When you can't go to the pub on a Friday night, you needed something else to do.
Well, exactly. I think that was it was one of those things we were living through it. And so my wife is an intensive care nurse, so we were living through it firsthand on the battlefront with her, and she caught it on about the 30th or 31st of March, and was confirmed COVID a few days later. and so had 3 weeks in bed. So you were sort of looking after her on one hand, and then seeing the commercial effect of COVID, as well as the physical effect on the clients and everyone else. So it was a it was a busy couple of months, so giving practical advice rather than necessarily strategic advice. That you look after your cash. The more cash you can keep in your bank, the more chance you have of fending off any wolves that are circling. And talk to your staff, talk to all. Just communicate with people, because if everyone was being hit by the same thing at the same time, and people were so in some cases understanding of the difficulties being faced by others, and that was the main thrust of probably everything up until probably the end of the last summer, and then I think the easing, and to help out, obviously breathed new life back into the economy, but sadly it appears also breathed new life into COVID itself, and got us back into the difficulties that we've seen over the winter. So I think now we're starting to see, the insolvency market has been very slow. For Q1 2021 versus Q1 2020, we were 50% down on admin appointments, so the appointments of administrators over companies. So that shows you that there was there's a lot of cash in the economy, or a lack of pressure. And I think in this instance, it's probably a bit of both. So I think most people would say that the CBILS and the bounce backs and the furlough schemes, insofar as looking after the humans in Britain and keeping food on the plates and heat and light in the houses, has worked. The big challenge is going to be how do we get that repaid through the businesses that have borrowed them. As taxpayers, what effects that going to have on us in the future? And was it really enough to protect businesses as they move forward?
And I suppose only time is going to answer that question, because there must be a large level of debt out there that wasn't there 12, 14 months ago. Yeah,
well, I think the revenue, and rightly so, have been flexible with payments. They've allowed deferrals, and that deferral has kept businesses alive to this point. But we're now at a point where how is that going to affect businesses' ability to borrow? So the Crown took a new preferential status, so coming secondary after employees, but puts them above the unsecured creditors. So that there's not going to be an awful lot of money if a business fails going back that way. But it also puts some of the funders at disease, because they're now looking and going, hang on a minute, you've allowed this 2 years worth of debt to run up potentially. Those numbers are quite eye-watering, and you're going to take some money out before me. That's going to really affect my recoveries if an administrator is appointed. So that it'll be interesting to see how the banks deal with life moving forward, having put so much money out and under good faith on the bounce back scheme and in the CBILS scheme.
I suppose the silver lining in that particular cloud is that the money they put out is at very, very cheap interest rates. And
it is.
There's an opportunity there that says if you had some expensive debt before the crisis, well, get that paid off first.
Yeah, and I think there will have been some people. So I suspect there are probably three categories of business. You've got the category of business that was going to fail. So I personally would probably see 2 or 3 business failures a month on a normal year. That just hasn't happened for the last 12 months for sure. So those businesses that were going to fail have been artificially supported by furlough, by bounce back loans, by government grants for property, and you'll have some of them actually now have been properly capitalised and are ready to go. And actually, some of those businesses will be able to turn themselves into a success because of the additional support they've been given, as opposed to an impending business failure.
Yep.
you'll then have some businesses who weren't going to fail, who've just been so badly affected by COVID and what's been going on, that no matter what support is given, they're going to find it very difficult. So, some of that might be in the hospitality trade as they find a way to bounce back. But when you hear some of the figures around, how much it's cost bars and restaurants from being in and out of lockdowns and what they can and can't do, I think there would definitely be some concern around how viable businesses are in that sector. But even across other sectors as well, where people are looking for bad debt protection and are insuring their debts, a lot of the insurers are now saying, actually, we're up against it here. We've lent a lot of, or we've provided a lot of cover against a lot of debtors, and we're now uncomfortable with the level of exposure that we've got. So for some businesses, just the ability to trade with other customers, and some of these are big blue chip companies. The insurers are feeling overexposed on that, and it's going to be fascinating, I think, to see how we unwind it, because politically, can we have a massive collapse and hundreds of thousands of businesses going bump? I don't think that would be allowed to happen. It doesn't seem to follow with what they've been doing. But then, how do they prevent that, and how do they support it without potentially borrowing billions and billions more? And that's going to be a real challenge for us all, as well as, I think, unfortunately, this probably comes just as we were getting towards the end of austerity, and a lot of business owners, certainly in SME land, have been working for the last 10 years, fighting to get back to where they were, sort of pre-credit crunch, and some of them now will be looking on, going, I've had 10 years of fight. Do I want to have another 10 years of fight, or actually is my personal wealth now in a position where I can just call this a day and let's walk away and retire?
I suppose that actually, in having gone through austerity, the painful as it was, that it put us in a situation that at least government could then start borrowing money again without it being too disastrous for the overall economy.
Yeah, I suppose all of that comes down to your political stance, doesn't it? Would our recovery from the credit crunch have been faster and stronger had we spent our way out of it rather than saving our way out of it, versus where we would have got to? And I guess hindsight is a great thing. No one will ever know
exactly
what the different outcome would have been.
I think that's one of those areas where there's probably no right answer.
No, and it's a saying that we use a lot in insolvency practices. We are where we are. We can't go back and change anything. So we now just have to deal with what the future holds and make the best of that. And certainly as a nation, that seems to be the current stance that the majority of us have taken. Where Brexit is done, there's no going back. COVID has been and done its worst, hopefully, and let's now try and get on that recovery and hope that there are some plans that we can achieve fairly shortly.
Absolutely. But we got you on the show, Iain, to talk about insolvency and what an insolvency practitioner can actually do, and how perhaps it's not necessarily the undertaker coming along for your business and how you can help. So what is the day-to-day life of an insolvency practitioner?
So I suppose there are a lot of different things that come into our world. You will see on my screen that one of our taglines is solving problems, resolving issues, and that ultimately is what an IP does, where people come to us with issues and we seek to solve them. Now, a lot of that in our ability to deal comes down to how much time we have, and how we can help. That gives us our ability to do things with our clients. So, yeah, if someone comes to us on a Thursday and say, well, you can't pay wages on a Friday, what do I do? We don't have an awful lot of option, because at that stage, your staff are expecting their money. We can't magic money out of thin air. And normally that's indicative of other problems within the business that have been running on for months and months in advance. And you've got to the straw that broke the camel's back. And at that stage, there are times where that is just an immediate call to action. We have to go in. I suppose ultimately the insolvency practitioner, as they are a liquidator or an administrator, our role is to protect the assets of the company, to realise them for the benefit of the creditors, and then pay them out to the creditors in repayment of the debt. So that's what our target is with every insolvency that we're involved in. If you come to us earlier than that, then we can look at our insolvency avoidance options and or softer insolvency processes that might allow the business to continue to trade and bring something out on the
That's interesting, because I've always assumed in insolvency you're normally dealing with the case that you've just mentioned. We've run out of money, we can't pay the bills, we've now got to wind this all up. So tell me some more about that idea. Somebody's come along, and maybe it's a couple of months before that Thursday when they can't pay the wages on Friday. What are you going to do?
The key bit is trying to understand what's being going on in the business. So at the minute, we're going to see a lot of people who are telling us we've been affected by COVID. Well, that's fine. But so let's go back to March the 23rd, 2020, because what was your business doing then? Were you a profitable business? Is it viable? Who are your customers? What are you actually making money off your key customers? Because there are so many businesses out there who sit back and go, I've got this fantastic customer. I do £500,000 turnover a year with them. Isn't it great? And you look at it and go, well, it's fantastic that you're doing £500,000 of the turnover with them, but you need to be doing 600 to be making a profit from them. And so actually that best customer of yours is losing you money. But because we see the cash coming in from them and they're paying on good terms, and they would do because they're getting a good deal out of this, there are a lot of businesses who don't have that granular detail of how customers are and how they're dealing with customers. And I think as well on the finance side, how much finance is costing them. We see a lot of people using invoice finance with it only cost me 1% because that's all that's charged on top. You go, well, it's only costing you 1% to put the invoice on, but then it's costing you 3.5% on the money that you're borrowing whilst it's out of the door. So that's quite an increase if you haven't covered that in your costings. So I think certainly in SME land, not every business has a financial controller. Not every business has a financial director, and they maybe don't have the detail behind what their business is really doing to understand when things go wrong, how they can recover that.
Yeah.
So I think we're looking at things like that. To say, if I've got a couple of months to look at this, we can actually dig into some detail. We can look at in detail P&L accounts and say, right, okay, this is where you're working, this is where you're not working. What do we do with the bit that isn't working? Is it inefficient? Is it an area that we shouldn't be trading in? So is it a little area that you went off to do one quiet day and thought, oh, this works because someone bought it off me, when actually it's just a distraction from your main business focus. And having those conversations with business owners, because ultimately I'm good, but I don't know everything about every business sector and every industry. We're relying on the business owners who work and have spent in a lot of cases their lifetime in a specialist sector to come to me and say, well, this is what happens in my industry. This is how I think I'm working. And for us to then challenge that back with what their business is really telling us. So working alongside their accountant to do that, I think that's one of the keys, or with other stakeholders in the business as well, so that a lot of the time, we will be introduced to someone early, not necessarily from the director spotting that they have an upcoming issue, but from a bank who spots that the client has an upcoming issue, or from an accountant who spots the same. So some of it, when we have the time, is very much an education piece on what is your business doing, what are your potential turnaround mechanisms. So to a degree, and I know you're a consultant, there are things that that you will do that I can't do, and vice versa. And it's about, so for us, at times, if we're dealing with a manufacturing business where they say, they want to say, I think we're just inefficient in our manufacturing process. Okay, let's see if we can introduce you to someone who can look at that manufacturing process with you and see if they meet with that agreement, and is there anything that they can bring in to turn that around. If they turn that around, what's the benefit going to be to the company on the other side, and is that a cost worth doing? So we can play the I call it the softer skills side of things. The discussions around marketing. Are you trying to sell your products in the right place? Do you need to go and look at a different market? One of the things that I quite often challenge business owners on is, what are your competition doing? And whilst you shouldn't be overly focused on your competition, they can give you some guidance as to what the world or what the world could look like. It's up to you to identify whether what the competition's doing is good or bad. But they can give you some ideas as to where they are, because a lot of us live in the Northeast is a very small world. There are a lot of businesses in similar sectors where they're intrinsically linked, and the business owners might not realize that. But when you go and hire the best salesman from the window company down the road, you're bringing in some of the practice of the window company down the road. And when your staff go to someone else, you're losing some of your business process into that business, and all of it will come together, hopefully, to improve business. That's what you're trying to do. But ultimately, you've got to be smart enough to realise when things are going a little bit south, and you need help, I guess.
So I guess that's it. It's recognising that you need help early enough. And I said, okay, it's a couple of months before that point at which you can't pay the wage bill. Is a couple of months enough in most cases, or are we talking really you need longer than that? Because change doesn't happen overnight, does it?
It doesn't. But I think what you can say is, so one of the key bits of guidance that we would give is to always run a 12-week cash flow. Ultimately, in most businesses, cash is king, and if you've got the cash to continue to trade, it will allow you to do to put some change into your business. If you can't do that within your period of having cash, that's when we can then bring in some of our processes that would support that business change. So it might be that you come to us with 2 months down the line, we can spend a month identifying, right, these are the areas, this is how it's going to affect the business, and this is what the positive change is going to be. We might ultimately look at it and then go, well, actually, that positive change isn't sufficient to turn the whole business around. We're still too far down the line to recover from that. So you might look at running one of our, you might look at doing a company voluntary arrangement, for instance, where you would, in effect, it is what it says, it's a voluntary arrangement of a company with its creditors. So you would put a deal to creditors to say, look, we can turn this business around. We've got a genuine plan of doing it. Here's all the assistance we've had beforehand, or in the lead up to this. This is how we're going to actually deal with that restructuring process. Would you accept us paying 80 pence in the pound on our debt? And we'll pay some profits over to the supervisor, so to me, for the course of the next 3 to 5 years. And once that's done, we will move on as a free company to continue to trade. But you've had some good money back in respect of your debt.
Yeah, and I suppose in a lot of cases, if you're going to say take 80 pence in the pound, it's better than 50 pence in the pound, or worse if you wind the company up.
Well, ultimately, I don't actually know what the stat is around money going back to creditors, but I would suspect that it's very rare that you get more than 5 pence in the pound going through any form of insolvency. Full stop. Ultimately, if a business fails, and I was looking at one a couple of weeks ago, which had a couple of £100,000 worth of plant and machinery on its books, but you get that valued up and it comes in at 60,000. For a sale at auction. Now, okay, you might do a little bit better than that on the day, but you could also do worse than that on the day. That then goes in to cover the costs of the process first. So, where insolvency practitioners aren't charities, and we're not government funded, we get paid out of the assets of the company. You have to pay the employees if there are employees made redundant for all of their protected claims, so redundancy notice pay, holiday pay, and arrears of pay. And actually, if you've got a business with with 10 to 15 members of staff who've been there 10 to 15 years, those numbers can add up to a relatively chunky sum of money. So ultimately, there are things that we put out to creditors in respect of CVAs where you might only be offering 25 pence in the pound because it's still 5 or 6 times more than you're going to get back through any other process. And it gives the company a fighting chance of recovery. But importantly, you also get the ability to move on and trade with that company again. So not only do you get some money back, but you get the ability to earn some profit off future sales. Whereas if you lose the customer, that's also going to have an effect on the creditor company as it moves forward. And we certainly see in some instances, when you get one of the bigger insolvencies, you get the trickle down effect coming through. So a failure of a big business will then trickle down to the next stage. So you might have the multinational company fails, that then brings down one of the big national players, which brings down 3 of the big regional players, which brings down 2 of the local players, which brings down 3 of the one-man bands, and all of a sudden, one business failure has resulted in a couple of hundred through the line. Albeit oddly, the Carillion failure didn't seem to have that same sort of trickle down effect. But, there wasn't quite as much follow through from that one.
No, that surprised me. I was just going to ask you about Carillion and what your experience was from that. And the last consultancy company I worked with was a very similar business to Carillion. And we got into big trouble in 2010 as soon as austerity hit, because we were big into public sector outsourcing and into... Actually, the outsourcing part of the business wasn't too bad because they're mostly long-term contracts, but the highways part of the business, suddenly government stopped spending money at all on roads, and 50% of the business just disappeared overnight.
And I think it's a challenge for those big businesses, isn't it? Because ultimately, yes, some of the work is being done by themselves, but other bits of work are being done by third-party contractors.
Yes.
And it would be naive to think that some of the work wasn't just one on price. They've all got their quality statements and an experience to fall back on to show that they can handle the multi-million-pound projects that they're being asked to deliver. But as you gradually pass that down and down and down, something the quality potentially gets weaker as you sub it out, and it's almost a procurement business as much as it is anything else. It is taking on big contracts and sourcing people who can do that work for the central government, and it's potentially just added a tier of profit in
Mm. And certainly the business that I was part of, one of the things that they would do on a long-term, say, local government outsourcing contract is they'd recognize there was business change that could be done in that area. There was transformation that could be done. There were ways and means of delivering the service for a lower price. But they'd go in, they'd probably look, okay, 10-year contract. What does it cost us in year one? What's it going to cost us in year 10? Okay, what's it going to cost us on average? And the average would be where the bid price was put in. So you'd end up in effectively, you knew you were going to make a loss for the first 3 years on that contract. There was no other way.
Yep.
And you were relying on making that transformation. And so that's one of the places that our organization got stuck, is that the business started falling apart while we were carrying that sort of financing arrangement of local government contracts.
Yep. And ultimately, the cheapest isn't always the best, right? I guess, and there does seem to be the nature of the world is that actually, if we can get stuff in cheap, it can be replaced when it goes wrong. The success of Primark, tell you that the quality is questionable, but the prices are fantastic. So you can get in there, get 10 new t-shirts to see you through your holiday and leave them all on holiday and bring back a case full of alcohol and take advantage of duty free. And I think that goes across a lot of sectors. Most people are bidding for work on price.
Yes.
And even if you think you have the greatest level of quality, price more likely will win out unless you've got a very special relationship with the buyer. And I think that's it's a challenge that all businesses face. We face it. There are insolvency practitioners up and down the land. All of us have access to. We're all capable of doing a liquidation, an administration, a CVA. We've all passed the same exams. We're all as qualified as each other is, and yet some of it through branding, some of it through experience. You set out and clients come to you with almost from different sectors, depending on the practices that you're involved in. You're unlikely to find an owner-managed small business walking through the doors of KPMG or Deloitte looking for restructuring advice. They're more likely to come my way. At the same time, I'm unlikely to see a listed company coming my way. They're going to walk through the big shiny doors.
And probably pay twice as much for the same thing.
Yes, and we've all passed the same exams. We're all doing the same things. We're all reporting to the same bodies. But that perception of, I suppose, a value is always there. It doesn't always then refer back into costs, I guess.
Yeah. So I guess you're in scenario one and you're doing the company administration, the liquidation, the wind up, and you see that through to the end. I suppose a variant of that is you've managed to take over the business, and as administrators, you're running it on and trying to sell the assets as a going concern. You stay involved. What about that voluntary arrangement thing? Is that kind of a one-off? You come in, you do the voluntary arrangement, you step away again, or do you remain involved in that sort of organization?
So we're very much project-based in what we do. So with a voluntary arrangement and with admins and liquidations, we will come in. So a voluntary arrangement is probably the one of the longer processes that we run. So it is 3 to 5 years. Right. But it's also a lighter touch process than an administration. So voluntary arrangement, the company is run by its directors based around the protocol that's set out in the voluntary arrangement and the rules that are there around it. Yeah. So in effect, the contract that they draw up with their creditors as to how they're going to do things.
Mm-hmm.
And we sit and manage that process. So we receive the money in, we report back to the creditors that we've had this money in, and we then send the money out to the creditors on the other side. So a CVA is a relatively hands-off facilitator type approach. We might have given some advice on the way in towards the restructuring and what that looks like. But ultimately, once we're appointed as supervisors, that's us then, to a degree, sat back, watching the money come in and sending it out. Whereas the administration can actually be, us with a team of people, hands on the ground, trading businesses and almost becoming, the business owners, as it were. You're running the business with a view to making profit, to return that to the creditors, or at least with a view to improving the sale outcome. And I think that's going back to the why do we exist? Well, we exist to maximise realisations. So if we can sell a business as a going concern, or at least where there is a viable business moving forward, so it might just be, you might only be able to sell a part of a business onto a third party or back to the directors potentially, but that can create a enhanced value if you know that there's something moving forward that's going to be profitable. So certainly, we would probably, I would imagine every administrator in the country would class that as their most exciting projects, because they're the ones where you are, you're running a business, you're getting your hands dirty, you've got a team out on site. You normally there's a team of IPs and their staff huddled around the boardroom table, working out strategies, looking at who we can sell it to. You've also got then the creditors who are who've been given notice of the administration. They're turning up, trying to get their any stock back that's in there, dealing with the retention of title claims. You're managing the employees who have been told that the administrators are there. So you've got administrative staff on site, panicking as to whether they are going to get paid. What does that look like? Are they going to keep their jobs? All of that, relationship stuff, and a lot of the challenges that we see, because we aren't the culprit, as it were. We haven't caused the scenario. We're just the messenger and the people in dealing with it.
We love shooting messengers, don't we?
Absolutely, and and actually, I have been shot at in when I've been out on jobs. The things that we see are certainly interesting. I was, when I was the junior member of staff, when the alarm went off and on the trading estate in Peterlee, down in County Durham, at 2:00 in the morning, and so this was the late 90s. The home phone rang because I didn't have a mobile at that stage. Woke mum and dad up in bed, and they came upstairs and said, "You've got to go to Peterlee. The alarm's going off." So they weren't best pleased. I was a little bit miffed. So got in my car, drove across to Peterlee. The police were sat there waiting with the security company, and all of a sudden we started to hear these pings. What's that? And the police said, "Get yourself indoors now. They've got an air rifle outside and they're shooting at us." And it's just you look back at it and go, "I can't believe that really really happened." And it was probably just for kids. It wasn't an unhappy creditor, but that's it's a job that you never know what's going to walk through your door next.
Right.
Dealing with insolvency, is it the butcher, the baker, or the candlestick maker who's going to come in to need some advice and see how you can help them?
Yeah. So just to wind this up, Iain, if you're a senior finance guy in a business that, okay, you've managed to get through COVID thus far, but you're very worried about where the future lies once you've actually got to start paying some of this debt back, what's the right point to talk to somebody like yourself?
So I think the most important bit is to talk to all of the people around you. So you might not need to come to me. you might not need to come to an insolvency practitioner. There are accountants who would look at your business in the same way that I am. The most important thing is not to bury your head in the sand when you see that there might be an issue ahead. You've got to get up and you've got to talk to people, because there are a lot of things available to help you in your business's time of need. There are different funders out there who look at distress levels that are always give us options. There are different processes, but if you haven't identified the problem and spoken to some people who can help, like your accountant, like solicitors, to a degree, like your friend down the pub, because actually it's amazing what different experiences people have had, and what worked for them might just work for you. So talking to people as soon as possible is the best thing to do. Seeking professional advice is the second best thing to do. And I would just say, I mentioned earlier about the 12-week cash flow element. If you can give us 12 weeks, we've got a fighting chance. I always refer to, because of my wife's intensive care bit, I spend a lot of time at home explaining to her what I've been doing at work, and I just automatically go to the intensive care type route. If you spot a little spot early on, and it turns out to be cancer, you've got a really good recovery rate of that. If you spot a little spot and ignore it and becomes a bigger spot, you've got a good chance of recovery. But if you spot a little spot and ignore it until it's too late, then the writing might be on the wall. And ultimately, particularly in SME land, your business is somewhere that you spend so much time and such a big part of your life that there is a fear of disclosing what's wrong with it, or asking for advice about it. And you wouldn't do it with a spot on your chest. So don't do it with your business either.
Yeah, I'm reflecting back to last week's show that I recorded with Catherine Clark, and we talk about having to make rushed decisions with little thinking time and potentially being under lots of stress. And your business is starting to get into trouble. Now, that's exactly the position you're at. And I think one of the things that Catherine observed about stress and that kind of lack of thinking time, you look at nearly everything as being negative. You don't see any of the positives. And an awful lot of what Iain and his fellow insolvency practitioners can bring is actually quite positive. It's not all negative stuff. And I can see where the reluctance comes from to pick the phone up and talk to somebody like you, because you're under stress. Oh dear, it's all going bad. If I ignore the problem, it might go away. But no, don't ignore the problem. Pick the phone up.
Yeah, and ultimately, we are, depending on who an insolvency practitioner is appointed by, can affect. If we're appointed by the bank on an aggressive appointment, we have to come in all guns blazing. We have to tie every single asset down and get our hands on it. If you come to us as business owners, 3 or 4 weeks before we're going to be appointed, we're helping you through the process. That's what we're here to do. We're looking after all of the stakeholders, and we're holding your hand, we're guiding you through it, and making sure that you don't do anything that causes you an issue. And I think that's the key bit for me to be saying to business owners is that there are things that you will, or actions that you'll take in the period leading up to a liquidation that can cause you trouble. Seek advice before you take those actions, and that can be avoided. Ultimately, the outcome might be no different for the company, but it will be better for you because you won't have taken that action.
And I'm just reflecting on that, and I'm seeing the screen that you've got behind you, the screen, the Zoom artificial background, and it's very corporate, representing your brand for those folk that are just listening to this on audio. But as well as the name of Iain's business at the top, it's got down the left-hand side our core values. Our core values: be kind. It feels good. You don't have to be ruthless to be successful. Be inspired. It can really help others. Be considerate. People aren't always in a great place. Be honest. It's who we are. Be fair. because everything needs balance. And I think take those 5 core values and then reflect on you in a bad place with a company you're not feeling very happy with its future, but reflect those values on top. You got somebody coming in who's going to be honest, who's going to be fair, who's going to be considerate, and who might just be inspired enough to help you out of the hole you're in.
Yep.
Iain, that has been fantastic. Thank you very much for joining us on the GrowCFO Show.
You're welcome. Great to speak to you again, Kevin.